Let me tell you the truth that finally made me a consistently profitable trader. The moment I stopped trying to predict the market, I started making money. And the crazy part, I didn't get better at charting. I didn't call the top. I simply learned how to trade with probabilities instead of predictions. And once I saw how Delta shows the actual odds of a price hitting certain levels, everything changed. This is the mindset shift no one ever taught me, and it's the reason I'm still here today. When I first started trading, I was obsessed with being right. I thought success meant predicting the exact direction every single time. And because of that, I took some brutal losses. The worst part wasn't even the money, it was the self doubt. I kept thinking, why am I not good enough to call this? It wasn't until I blew up one of my accounts that I realized I didn't need to be smarter. I needed a better system, a better framework, something that didn't require perfection to win. That realization changed everything. When I discovered selling options, specifically credit spreads, it opened my eyes to a completely different game. I didn't have to perfectly predict where the stock was going to go anymore. I just had to understand where it was not going to go. And the moment that clicked, trading stopped feeling like gambling. It became controlled, defined, repeatable. Selling options allowed me to position myself where probability was already on my side instead of relying on emotions or guesses. So let's talk about this probability mindset, what 90% of traders will never learn. Most traders are stuck in the prediction mindset. Where's the stock going next? Up, down, sideways? And they treat every trade like a test that they have to ace. But selling options flips that mentality. With Delta, I could literally see the probability the stock would reach a certain strike or location on a chart before expiration, before a certain time. A delta of 10, that's about a 10% chance that the price will be touching that level. Suddenly I realized I didn't need to be a fortune teller. I just needed to choose the probabilities that made mathematical sense. That's when I stopped predicting and started positioning. So how I use Delta to stop guessing. Once I understood Delta, my whole trading routine shifted. I stopped asking where's the stock going and started asking where is the stock not likely to go. That one question changed my results. Instead of placing high stress directional bets, I began selling credit spreads at low probability levels, letting the math, the time decay, and the probabilities do the heavy lifting for me. Even when a trade moved against me, the probabilities were still in my direction, still favoring me. It felt like I had finally a strategy that worked with my limitations instead of exposing them. So how do you find delta to be able to figure out where on the chart the probabilities are telling you to sell that credit spread? Well, if you go to your options chain, so in this case, this is on TradeStation, the Option Station Pro, and you choose the expiration that you're looking at. I just chose a random expiration here. So over here on this options chain, this side, that's your puts. This side, this is your calls, and your strikes are right here in the middle. Okay, your strikes are basically the price of the stock. So both puts and calls have their own delta. So with puts, the lower it gets from the current price, the lower the delta. With calls, the further above the current price of the stock, the lower the delta will be. So let's look at puts here real quick. If I were to scroll up, you see how this is getting lower, right? So the price right now is $6.79 on SPY. The higher this thing gets, the lower it is. So if we were to look at the $6.55 price and then just go straight on over here to the right, you are going to see that this is a 0.01 delta. That's saying for this specific expiration, there is a 1% chance that the stock will get to this area during this expiration. Now, if we go out to a further expiration and scroll on down and we go to that 655 level, now you can see that this delta is a 16. There's a 16% chance it's going to get there. Why? Because there's more time for it to make that larger move down. Now, if we're going to do the exact same thing on the call side of things, let's pick a price higher than the current price. Let's go to the $700 strike. Okay, so currently right now the stock is sitting around 683-ish. Let's look at the $700 strike that expires on this specific expiration. So the $700 strike, the delta right here is saying 0.22. That means there is a 22% chance that the stock will move to the $700 level during this expiration. So you can now pick out, based on math and based on probabilities, where the stock is likely to go or to not go during that expiration time. So again, if I look at this stock here and I look at the 661 strike put, so That's saying that the stock's going to get down to 661 during this time frame. It's got a 20 delta. So it's got a 20% chance of getting there, which means it has an 80% chance that it won't get there. And I'm looking at the opposite side whenever I'm selling these credit spreads or selling any options at all. If a strike has a 20% chance of getting there during that time, it's got an 80% chance that it won't. And so that's what you can start putting math on your side. For me personally, I enjoy selling the credit spreads that have a 90% chance mathematically of winning. And so I'm constantly selling around the 10 delta up here. So that's what I'm doing. On the puts or the calls, I'm giving myself a huge probability mathematically that I'm going to be extremely consistent on my wins. So let's talk about the breakthrough moment when it all finally made sense. The breakthrough came when I realized this simple truth. I didn't need to beat the market. I just needed to structure my trades around where price wasn't likely to go. Credit spreads became the first strategy that let me win even when the market wasn't cooperative. And once I understood how Delta reveals the actual odds behind every setup, it gave me the consistency I'd been chasing for years. I knew that if I followed the math, followed the process, and respected the probability, the results would follow. If you want to learn this exact framework, the same mindset, the same probability-based strategy that turned everything around for me, I put together a completely free credit spread starter guide. Now, this guide breaks down the basics, the math, the setups, and how to start trading with probabilities instead of predictions. It's the guide I wish someone gave me when I first blew up my trading account. The link is below, so go grab it and start building consistency the right way.